All right, so let's get right into it. You ever see a company put out what looks like amazing news, and then you watch its stock just completely take a nosedive? Well, that's exactly the confusing and honestly kind of fascinating situation that just played out with Nike. And today, we're going to unpack that whole paradox. I mean, look at this number. Right after their big earnings announcement, Nike's stock just plummeted, a 9% drop in extended trading. Now, a 9% drop, that's a major move. That's the kind of thing that makes everyone, from the big shot Wall Street pros all the way down to you and me, just stop and go, wait, what on earth just happened? And that really brings us to the central mystery we're tackling here. Why in the world did Nike stock get so hammered when it looked like they did everything right? To figure this out, you really have to look at two totally different sides of the story. The good news from the quarter they just finished, and the really bad news about what's coming next. So first things first, let's look at the part of the story that should have had investors cheering. We're talking about the win, that clear-cut victory in the third quarter. And just look at how clear this win was. Wall Street analysts, they were expecting earnings around 28 cents a share. Nike comes in and delivers 35 cents. Boom. They predicted revenue would be about $11.24 billion. Nike brought in $11.28 billion. I mean, on paper, this is a solid beat on both the top and bottom lines. It's a textbook win, right? And this is where it gets even more interesting, because it shows just how much better things were than anyone thought. Take Greater China, for example. Now, everyone knew that market was struggling. And yeah, revenue did shrink by 7%. But here's the kicker. Analysts thought it was going to be way worse. So believe it or not, even their bad news was actually good news. Okay, so if everything in the rearview mirror looks so rosy, why the full-on market panic? Well, it turns out the answer wasn't in the past at all. It was all about a pretty stark warning they gave about the future. And here it is. This is the number that sent an absolute shockwave through the market. Nike straight up warned investors that they're expecting a 20%, yes, a 20% sales drop in their key Greater China market for the quarter we're in right now. That's not a little slowdown, folks. That's like slamming on the brakes. And this wasn't just a problem in China. The company said that for the entire company, overall sales for the next quarter would probably drop between 2 and 4%. And for the rest of the year, they're looking at a drop in the low single digits. So this paints a picture of weakness pretty much across the board. And then you have Nike's own CFO, Matt Friend, who basically put this giant flashing caution sign on top of the whole forecast. When he starts talking about a dynamic environment, disruptions in the Middle East, rising oil prices, what he's really telling investors is, hey, this already bad forecast, it could get even worse. So suddenly that really certain good news from the past just got completely wiped out by all this uncertainty about the future. Okay. To really, really get why this bad news was so damaging, you have to understand the bigger picture. All of this is happening right in the middle of a massive company-wide overhaul. Let's call it the turnaround challenge. So the CEO, Elliott Hill, he's in the middle of steering what's been called a colossal turnaround. We're not talking about a small tweak here. This is a fundamental change to how Nike operates. And he's been super clear with everybody. Nike is a massive, complex company. This is going to take a long, long time. It's not a quick fix. And you can really see that uneven progress he's talking about right here. Look at North America, their biggest market. It's growing by a steady 3%. That's good. But that little bit of good news is getting totally erased by that 7% drop in Greater China. It really is like taking one step forward and 2, maybe 3 steps back. Here's another really interesting piece of this whole turnaround puzzle. It's their sales strategy. For years, right, Nike was all about selling directly to you and me, through their website, their apps, their own stores. But now they're kind of pivoting back to their big wholesale partners like Foot Locker. And you can see it working. Wholesale is up 5%, but their own direct sales, they're actually down 4%. And look, as if turning this giant ship around wasn't hard enough, Nike is sailing smack into a perfect storm of global economic issues. You've got conflicts, oil prices are going up, trade wars are still a thing, and maybe most importantly, shoppers are just flat out tired of inflation. Every single one of these things makes an already really tough job that much harder. Okay, so we've laid out the good, the bad, and the really complicated. Now let's tie it all together and figure out exactly why Wall Street basically freaked out. This right here is probably the single most important thing to get about this whole situation. The stock market, it's a forward-looking machine. It doesn't really care what a company did yesterday. It's all about placing bets on what it thinks they're going to earn tomorrow, next quarter, and next year. And listen, Nike's own CEO is practically spelling it out for everyone. When Elliott Hill says things like the pace of progress is different and the work is not finished, he's sending a crystal clear signal to investors. He's saying, hey, you got to be patient with us. This is going to be a long, bumpy road. And you can bet Wall Street heard that message loud and clear. So really, it all just boils down to a simple two-step thought process for investors. Step one was kind of like, okay, nice job on that Q3 beat. We see you. But step two, the one that really matters for the stock price, was, whoa, the future looks really weak and uncertain. We're selling. And in that fight between a good past and a scary future, the scary future won, hands down. And all of this leaves us with the billion-dollar question for one of the most iconic brands on the planet. You've got Nike trying to pull off this super complex turnaround on the inside, while at the same time they're navigating this really stormy global economy on the outside. So the question isn't just can they fix their own problems, it's can they fix them fast enough to power through everything else that's coming at them. That's the real challenge that's going to define Nike's next chapter.